Hey everyone, welcome back. Today we're doing a deep dive on DLF.
DLF.
Yeah, I'm really excited to dig into this one.
Yes.
We've got their latest financials A&D, the presentation they put together for their earnings call, which by the way was just on October 26th. So this is all super fresh stuff,
Yeah. Hot off the press.
hot off the press.
Yeah.
We're talking about their second quarter and the first half of their fiscal year 25, which ended September 30th,
Right.
2024.
So really recent.
Yeah, super recent. And we're going to unpack the numbers, but also, what really makes this company tick and what they're betting on for the future.
Absolutely. And one thing that I found really interesting right off the bat is that DLF isn't just your typical real estate developer. They've got this kind of a unique structure. They've got two sides to their business.
Yeah, I noticed that too. It's like they're playing two different games at the same time.
Yeah.
On the one hand, they're out there selling like luxury apartments and commercial spaces.
Right.
But on the other hand, they're building this like steady income stream from rentals. It's fascinating.
It is. It is. And they actually have names for these two arms of the business. So they call it DevCo for the development side and RentCo for the rental side.
Okay, DevCo, RentCo. I like it.
Yeah, and what's really interesting is that DLF is actually one of the very few companies in India that's doing both of these things at such a large scale.
Yeah.
It's like they have this high-stakes poker game going on with DevCo, and then this nice, reliable savings account with RentCo.
I love that analogy. It's like a cash cow and a high roller all rolled into one.
Exactly.
So, all right, let's talk about DevCo, the high roller.
Yeah.
Their new sales bookings this quarter were pretty impressive.
Uh-huh.
I mean, we're talking almost 700 crore rupees.
Right, a huge number.
Which, if you're not familiar with rupees, let me just break that down for you. That's over 85 million US dollars.
Wow.
Just in Q2.
Yeah, impressive.
And here's the kicker. That's part of a 53% compound annual growth rate over the past 4 years.
53% CAGR.
So they've been consistently crushing it year after year.
Absolutely they have, but here's where it gets really interesting. The reports also mentioned that approvals for new projects were a little bit slower this past quarter.
So they're hitting these impressive numbers even with a few roadblocks in their way. Makes you wonder what those sales numbers could have looked like if everything had gone smoothly.
Exactly. It suggests there's a lot of pent-up demand out there and the potential for even bigger numbers once these projects get the green light.
Oh, I see what you're saying. So, like, once those approvals come through, things could really take off.
Yeah, and get this. They've got a pipeline of over 12 billion US dollars worth of new launches planned. It's mind-boggling.
12 billion. With a B. Okay, now I'm really paying attention.
Yeah.
What kind of projects are we talking about here? Like, give me the details.
Well, get ready to be wowed because they're going all in on luxury. Out of the 37 million square feet they're planning, 26 million is dedicated to luxury housing.
Wait, hold on. Let me do the math here. That's almost 3/4 of their entire pipeline. Are they that confident about the luxury market in India?
They seem to be, yeah. And remember, we're not just talking about individual apartments here. These are massive, multi-year projects that will shape entire neighborhoods and generate revenue for years to come.
It's like they're betting that the appetite for luxury in India is only going to grow.
It seems that way.
So, okay, let's talk about the profit side of things.
Yeah.
I saw that their gross margins from new sales are already around 40%, which seems pretty healthy to me.
It is. That's already very strong. But here's something else that jumped out at me. They have another 1.6 billion US dollars in gross margin that's just waiting to be recognized from ongoing projects.
So it's like money in the bank.
Yeah.
They've already earned it. It's just a matter of time before it hits their bottom line.
Precisely.
Okay, so they've got this steady stream of income from RentCo, and then DevCo is out there hitting home runs with new sales A&D, locking in future profits with these massive projects.
It's a powerful combination.
This two-headed beast strategy is really starting to make sense. Now, I'm curious to see how their rental business, the Steady Eddie RentCo, is actually performing.
Let's dig into that. So their rental income is growing at a steady 10% year on year.
10% year on year.
Yeah.
That's, that might not sound like a huge jump, but for a company as big as DLF,
Yeah.
it's pretty impressive.
It really is. It's like they're moving a mountain,
Yeah.
The bigger you get, the harder it is to make significant changes.
Yeah, 10% on top of what they're already bringing in. That's a lot of money.
Yeah.
What's driving that growth? Is it just those new projects coming online or what?
It's a combination of factors. They have a 93% occupancy rate across their portfolio.
93%.
Yeah, so that tells you their spaces are in high demand.
Wow.
And yes, those new projects are definitely contributing to that growth as well.
I see. So they're filling up those spaces as soon as they become available.
Exactly.
Speaking of those new projects, the reports mentioned DLF Downtown in Gurugram.
DLF Downtown.
What's the deal with that one?
It's a perfect example of their long-term thinking. It's a massive mixed-use project
Massive. Okay.
with different phases that are staggered over several years.
Ah, that's clever.
This means they'll have a steady stream of new rentable space coming online, which will keep that rental income flowing nicely.
So it's like they're playing a strategic game of chess with their development. They're not just building for today. They're thinking 5, 10 years down the line.
Exactly. And this leads me to another interesting point. DLF's commitment to sustainability.
Oh, yeah. I saw that they've received a bunch of awards for their eco-friendly practices. Now, I'm all for saving the planet, but how does this fit into their business strategy?
That's a great question. You know, in today's world, sustainability is more than just a feel-good thing.
Right.
It's actually a smart business move.
Okay.
Think about it. Tenants are increasingly looking for environmentally friendly spaces.
Yeah, that makes sense.
And investors are really prioritizing companies with strong ESG credentials.
ESG, so environmental, social, and governance, right?
You got it.
So being green actually makes them more attractive to tenants, A&D investors. Who knew?
It does. It's a win-win situation.
Like win-wins.
And let's not forget the cost savings that come with efficient energy and water usage. They've even achieved LE Zero water certification for some of their buildings, meaning they're incredibly water efficient.
So they're saving money by going green.
Absolutely.
Smart. Okay, but let's be real for a second. Money talks. Can DLF actually afford all these ambitious plans?
Their financials look really solid. They have healthy cash flow, even after paying out a pretty substantial dividend to their shareholders.
Hold on. So they're making money, paying their investors, and still have cash to spare.
Yeah, that's right.
That's impressive.
It is. It gives them a lot of flexibility. Yeah.
They
can invest in new projects without having to rely heavily on loans.
Right. No need to go begging for money.
And it means they can ride out those market downturns a lot better than companies that are drowning in debt.
Makes sense. Speaking of debt, remember how we talked about that two-headed beast strategy earlier?
DevCo and RentCo?
Yeah. Well, there's another interesting detail here.
Okay.
DLF is actually net cash positive.
That's right. It means they have more cash on hand than debt.
It's pretty uncommon in real estate, wouldn't you say? Especially for a company as big as DLF.
It is. It's pretty rare to see.
Yeah.
And it puts them in a really strong position. They can tackle those mega projects that other developers can only dream of.
It sounds like DLF is in a pretty unstoppable position.
Right.
They've got the financials, the strategy, and they're committed to sustainability.
Mm-hmm.
But I got to know, where do they go from here? What are their plans for the future? Well, it looks like they're all about growth, growth, growth.
Yeah.
They're doubling down on rentals. They want to expand their retail presence. And they're even thinking about going into new markets, like Mumbai.
Ambitious.
Super ambitious. They're not just sitting around counting their cash. They're looking for new ways to build their empire.
It's a smart move. And you know what? This actually impacts you, the listener.
Oh, really? How so?
Whether you're an investor looking at their stock, or maybe you're thinking about buying a home, or even if you just like to keep up with what's happening in the Indian economy,
Right.
DLF's moves matter.
They're a huge player in the real estate market, and that market is tied to how the entire country's economy is doing.
Exactly. And they're aiming for double-digit profit growth every single year.
Every year.
Wow. That's their goal. For a company their size, that's a pretty bold statement.
Yeah, no kidding. It's like they're saying, we're not just going to keep up, we're going to blow past everyone else.
That's the idea. But, you know, it makes you wonder, are they being realistic?
Yeah, are they biting off more than they can chew?
Mm-hmm.
I mean, there are always risks,
I
right?
know. Of course. The reports mention some ongoing litigation that could have an impact on their finances.
Legal stuff.
Yeah.
Never fun.
And those ambitious targets, well, they come with a lot of pressure.
Pressure to perform.
If they don't meet those targets, investors might start to get nervous.
So it's not all sunshine and rainbows. There are definitely some challenges ahead. But hey, they seem to be up for it.
They do. And let's not forget that two-pronged approach.
DevCo and RentCo.
Exactly. We talked about the benefits, but are there any downsides to running two very different businesses at the same time?
That's a good question. I guess if one side starts struggling, it could affect the other, right?
Exactly. Let's say the residential market takes a hit and DevCo's sales drop.
Oh.
That could impact their cash flow, and suddenly they might not have as much money to invest in new rental properties.
There's a balancing act.
It is. They need to make sure both sides of the business stay strong to keep that momentum going.
Well, I think we've covered a lot today.
We have.
We looked at their financials, we talked about their strategy, and even thought about what the future might hold for DLF.
And I think the biggest takeaway for our listeners is that even huge successful companies like DLF are always changing and adapting.
It's a dynamic world out there.
You have to stay informed, ask questions, never stop learning.
So as you go out there with all this new knowledge about DLF, what's the one question you should be asking yourself?
The big one is, do you think DLF's bet on luxury real estate will pay off?
Because they're really going all in on that.
They are. They're assuming the economy will keep growing.
But what if things change?
What if interest rates go way up? Or there's some kind of unexpected economic downturn?
That's a really good question. And there's no easy answer.
But by digging into all this information, you're in a much better position to make your own judgment.
And that's what a deep dive is all about.
Exactly.
So there you have it, folks. We unpacked the numbers, looked at their strategy, and thought about DLF's future.
We even talked about sustainability, corporate governance, and how the real estate market affects the whole economy.
I don't know about you, but I learned a lot today.
Me too.
And hey, if you want to learn even more, go check out those financial reports and earnings call presentations.
There's always more to discover.
You might even find something we missed. So until next time, stay curious, keep exploring, and don't be afraid to ask those tough questions.
See you next time.